Welcome to the daily insights that matter. In today's DITM, we're going to be talking about the services sector, which has been in the news for all the right reasons. First, we start with the Services PMI numbers. Now, the Purchasing Managers Index for the services sector recorded a massive increase to 62, which was a 13-year high, indicating high business sentiments. Now, as you're aware, a reading above 50 denotes expansion, whereas a reading below 50 denotes a contraction in services activity. Now, the PMI for the services sector released by credit rating agency S&P Global rocketed to a reading of 62 in the month of April from 57.8 in the month of March. Now, this was the 21st straight month that it showed a reading of over 50, which implies continued expansion in the services sector. Now, this high reading was driven by robust demand for new business and output in service, especially in the finance and insurance sectors. Now, in spite of rising price pressures, there was a pickup in demand and new business growth provided by favorable market conditions. Additionally, new export orders rose for the third month in a row and at the fastest pace over the quarter. Now, the month of April witnessed business sentiment strengthening. Strong growth in services, which make up almost 60% of India's overall GDP, indicate a very promising story ahead. However, despite the substantial pickup in new orders, the labor market seemed under pressure and the increase in employment was negligible. That being said, the business sentiment is strong and companies are even more optimistic now about the pickup in business activity going forward. Additionally, at the risk of sounding repetitive, the services sector has been in an expansion zone for the 21st consecutive month, which is also a very big positive. Second, we talk about the India service exports. India's merchandise exports have been hit by a slowdown caused by the conflict between Russia and Ukraine. Additionally, the rise in commodity prices and the impact of inflation globally has had a significant impact on India's merchandise exports. However, surprisingly, India's service exports are doing really well and growing at a fairly fast pace. Now, take a look at this data point. When we compare on a year-on-year basis, India's services exports have shot up by a record 26.6% in the last financial year of FY23, which ended on 31st March 2023, to $322 billion, helping close the gap with the merchandise exports, which grew by only 6% to $447 billion. Now, India's service exports rose by 13.1% year-on-year to $30.48 billion in the month of March alone, while the imports recorded a 6% growth to $16.27 billion. Now, the service exports have grown remarkably and have shown resilience in the face of economic disruptions. This impressive growth can be attributed to India's robust services industry that has become a key player in driving India's economy. My colleague Merlin had discussed the importance of the services sector in India in our Third Empire episode dated 23rd April 2023. You may take a look at it to understand the significance of services exports a little better. Another interesting point to note is that in contrast to merchandise trade, services trade carries a surplus. While India typically experiences negative net exports in goods due to the import of oil and gas, its net exports in services have continuously remained high. Now, the upswing in services exports may serve as a protective measure for the economy against external risks and the growing overall trade deficit. So what does all of this news mean for you? While the global outlook is deteriorating and very uncertain, the services sector is in expansion mode, creating strong business sentiments along with service exports at significantly high levels. This will have an indirect positive impact on you. Now, the growth of services exports is expected to grow significantly and would help India to contain its overall trade deficit. This will also therefore have an indirect positive impact on you. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.